Good morning, everyone. Welcome to the show. For the Capital, before the bell, with our dear guest, Steve, our co host of the show. Hi, Steve. Hi, everyone. How is it going?
Henry, everything's good. Happy Wednesday. Happy day full of impulses. Lots to talk about, my friend. And yeah, let's get into it.
Yeah, perfect. Guys, again, one quick reminder. You have already seen it right now, but we cannot state it enough. Risk disclosure, always do your own thinking, never follow blindly, and trust anything we are saying. It's a pure educational and entertainment purpose. So, therefore, please think for yourself. Let's go. So, what do we got? Basically, markets are wild. Got some news yesterday, and there is some today. Let's talk about it, Steve.
Yeah, it just seems like tech, semiconductors, and the whole AI play just continues to get hit, Henry. People are saying, was it always overvalued? Is money flowing into more reasonable assets right now and not just that one key two-syllable word right now, AI? And yeah, it makes sense. I'm not saying that we're going to correct a crazy amount like 40-50% from the highs. However, it does make sense how it was overvalued. We are coming back to reason. Money is now flowing in and out because remember, you guys, money doesn't always flow out and into cash. It flows out into other assets. And Henry was labeling how and showcasing other indices, other indexes, how they are acting much stronger than NASDAQ. This is what we do here, you guys. Before the bell, we like to give you guys a broader perspective of why our markets are reacting this way. And yeah, let's get into it. But before we get into the charts, let's just check out the news for today. What has happened? What is incoming? And yeah, it just seems like at 8:30 we had not major news, but still something we can look at. Core sales, Philly Fed, retail sales, all looks like coming in strong, and as well as unemployment claims coming in. Actually, no, weaker unemployment claims came in weaker than forecast. But yeah, all coming in 8:30 Eastern Standard Time. And then later on, we have President Trump speaking. I'm not too sure what he's speaking about. It's a little vague. Maybe Henry knows a little more what he's speaking about, but it seems like man is creating headlines at any moment, either surprise or um, either surprise or incoming predicted. But it seems like the surprise headlines are making much bigger splashes into the market, right, Henry, than the
Yeah, just maybe one thing, like with the current escalation between the US and Iran, I basically stopped listening to Trump and I'm just focusing on the either like from Iranians themselves, what they are what they are saying, if they confirm it or not. Because like Trump is all over the place, right?
yeah,
20% tax, what was it? Guardian of the Strait tax, right? Uh,
something new every time. Yeah,
so yeah, so therefore I think it's more important to be aware that he is speaking, be aware that another uh, like Trump tweet, social truth
yeah,
meme tweet been released. But at this point, I really just interested in the market reaction itself, right?
yeah, exactly.
Than what actually is being spoken. Because, like, if it's a completely like rubbish, it will be denied either way by one of his party members, like half an hour, a couple of hours later, right? Or they're gonna just correct it. They're gonna just tell something completely different. Therefore, I would not care too much about that, what is actually being spoken, but rather than a message came out, right? And then just following the impulse. So if there's a level, if there's a support, the market breaks through, market is still broken, then you can be sure that was something that is not positive to the market. So just follow the flow, right?
Yeah,
Follow the money flow.
yeah, exactly. So yeah, just Dissecting the news, you guys, retail sales again came in strong. Strong consumer spending resilience month over month. But also remember, this is also the previous month that just came out. So this could, always be indicative of big events. Always, a lot of it could be tied into the World Cup, huge event worldwide, globally, especially in the US. Things could change next month, so those numbers will be interesting. The initial jobless claims stayed low and steady. And also, no cracks in the labor market, you guys. No big surprises. So also we can go back to the charts. We're seeing a bit of a soft pre-market, but in news case, not too much of a sell-off. So I'm just looking at that a little closer, seeing how New York will react afterwards, and then later with Trump speaking. And I just did a little research, and just all it's saying is that he's addressing the nation amid the Iranian tensions. And that's all it is. All I could find, Henry, is he's just addressing the nation. Maybe there's some new news, some new updates, but we never know if those updates are correct or not, or what's really going on, or if it's,
But that's the thing, right? For the last century, addressing the nation is being considered a big event, like that when the president had to say something, but because the president was basically speaking 4 times per day or even more in any kind of interviews, phone, cameras, whatever. Sometimes it's I think it got really inflated.
Yeah, exactly. So this could be just a wild card for volatility. Any hawkish Iranian comments or big policy could, spike oil volatility and also affect indices. But any positive tone could give us some risk on boost to the upside. As we know, Nasdaq has been selling off much harder than S&P and Dow Jones, which makes a little more sense how liquidity is moving away from tech and into those indices, because those indices are more broad. They are stronger in other sectors, where Nasdaq solely seems like lately just based on AI and semiconductors and chips. So it's really,
and I mean, and that's the thing, right? It's been the whole narrative feels like the last decade, with like at least the last 3 years, right? Maybe even 3.5, 4 years, basically since the outbreak of the war. It was like in parallel we had this major run of AI narrative, and it started slowly, right? It was all about the story itself, and then the whole capex thing came up with more debt financing and stuff like this. And I think now we're at a point where the expectations are so ultra high, and that's actually the crazy thing, right? It's like TSMC'S, SML, Samsung, Micron, I think all of them basically hit or surpassed the expectations, right, of the Wall Street. But then the Wall Street is like really, it's a kind of sell the news event, because everything has been already priced in, and in order to surpass that, it's not enough. Like if this expectation was like 60% and you hit 60% and you hit 65 or 63, you would probably need like 100%, right? So like by a big margin to hit it above, and this is getting harder and harder. And so it's not like the correction itself and those semiconductors plays, it's not about the results themselves, but rather about going forward, what is going about to happen with the capex investments, right? Where will be the money coming from, and is this actually sustainable? So we will see. I mean, again, right, where like some of us have been talking about it now for years, like it's too high, and so at one point everyone is just folded and is basically saying, or me myself, I'm like for 2 years now I'm saying, all right, I don't know, it seems high, it seems overvalued, but so was 99, 2000, right? And then just like kept on pushing. And again, guys, a caution note, right? Be careful. Risk management, I mean, we're preaching it every day, every other day. We're showcasing stuff, we're preaching it. It doesn't, like, your personal opinion has no space here.
There's no space, and everyone will have an opinion. It doesn't matter. At the end of the day, you guys remember, we are prop traders. The only opinion that matters is how you secure your accounts, how you trade your accounts. What we're doing right now with Henry and I, we're just showcasing you guys just to be aware of headlines that can create some friction into the markets and kind of give, because Henry, especially Henry, has a lot of experience in the markets, and he can give his knowledge and wisdom in it and just give you guys a little heads up of how these headlines work, how they're majority of the time just liquidity events to exit, and also could be liquidity events to enter. And usually it's the other side where it's happened it's very similar to the whole dot-com bubble. At the very end, they were just printing bullish headlines to create more bids on the other side, because those big orders cannot exit unless they create liquidity. That's the whole point. And we're kind of seeing that right now, Henry, all this positive outlook on AI. It's very interesting where things are looking a little toppy. So is this another liquidity event? We have to wait and see. So
and that's the thing, right? I mean, just a little chat here about AI itself. I can completely see a future in it, right? And I use it myself. I think everyone around me is using it. But the question remains, the companies are not profitable yet, right? It's like all the pet.com and AOL and what kind of names they had back in the .com era. And it's not about do people use it or not. It's about, can you sustain the profitable path? And it just happens to be that it costs a lot of money to fire up AI and with plenty of energy and things like that. So you need to have a strategy that you actually can make it work. And this is, I think, a topic where more and more investors are starting to question, do those companies have an actual revenue model, or is it just an exit model for the founders and investors? And this remains to be seen, right?
Yeah, and all it's been proven really just being a subscription model, subscription revenue. And there will come a time, you guys, where it's not going to be free anymore, where everyone's going to have to pay the $20, $30. They might even bump it up to $50. But given the power of knowledge and information, I would guarantee majority of people will still pay that subscription, either on Gemini, ChatGPT, Grok, Claude, any of the ones that are available, especially the ones that are a little pricier for businesses. And it could be sustainable for now if everything just became a subscription model, like the Netflix, like the streaming services, where everyone just pays the month to month. But is that all it's going to be, Henry? Just a knowledge base and nothing else? For now, we'll have to wait and see, because so far that's all I see into it, to be honest.
Yeah. No, and that's true. And I mean, and so therefore I'm saying, hey, wait, we will get back to your chart. I just want to show. Look, guys, Nasdaq, right? We have been talking about this range, whatever it is. It's a diamond formation or it's a bullish flag continuation pattern. We don't know yet. But all we have been talking the last couple of weeks is about this range play. And this is the only thing that Steve and I are looking for. We don't care about the fundamentals behind the companies. We don't care if we are right or wrong. It's like, while you trade, only focus on the price, on the impact of price, like of the news themselves, right? When they're coming out and you get this initial impulse, this is all the information you need. Keep your personal opinions, as hard as it might sound, keep them for yourself till you turn off the charts, and then you can talk to your friends, you can go to a bar for a beer or whatever you want to do, sports, and then you can talk about your opinions that you think that it's way too high, that it's wrong, it should have been this way, and then you can have opinions, but not during your trading time, because there's no space for that. While you trade, it's basically just execution only of your strategy that you should have tested and prepared beforehand, before you turn on your real charting software and your dome and your broker. And only afterwards, after you shut it down, then you can have an opinion and your personal view, but not in between.
If you really want to have an opinion on something, there's the World Cup. Go have the opinion. Whether Messi's the greatest, he made the final, he beat England. I know there's a lot of people upset, a lot of people happy. If you guys want to have an opinion, go watch some football, European football, some soccer, and go have an opinion on that. But when it comes to markets, like Henry said, focus on your own path, be private about it, and just be accountable afterwards once you see the results.
I mean, you can also reach out to Steve and to myself on X or any other platform, and then you can have a discussion with us about your opinion, and then yeah, we'll tell you our private opinions and about some topics. But again, it has nothing to do, like it has no space while you trade your account. All right, let's get back to the news. So we talked about semiconductors. We talked about the yields. Basically, no, we didn't talk about the yields yet, but we talked about retail sales and
but also, I also just want to bring up this, you could say, story of the day, impulse of the day that came in. But this also came around the same time as our economic events, the retail sales and unemployment claims. So the pivot I have for my impulse level actually lines up closely with the economic events, but I think I'm going to choose economic events because they actually shifted the volatility a little more than this news here, where the Iranians are telling the Yemens to close the gateway. So this is affecting the U.S. with the Red Sea. I'm not going to dive too much into this, you guys. I don't know too much information. Did a little research on it. I know this will affect oil since that area has massive traffic with the Red Sea, and shutting it down could affect energy prices. So this whole statement here, will definitely affect our
I mean,
oil.
maybe just a quick side note. It was basically up to now, it was the back door for the Arab states to bring out some like parts of their oil. So right, so it was not completely blocked by Iran. So closing this is actually a big deal. So I'm kind of surprised that the markets, especially oil, didn't react harder to it. So as always, if I don't know why it has not had the impact I would have thought it should have, then most of the times some news will come out, probably later today or tomorrow, where they will explain why it was not the case.
Yeah,
that's what usually happens. So
yeah, exactly. So also, yes, how does this affect NASDAQ? Tech is always rate sensitive, you guys, growth sensitive. So higher oil means higher costs, potentially Fed being hawkish and money rotating out of tech into energy and the defense sectors. So just something to keep in mind of you guys, how it can affect the NASDAQ if you guys are trading NASDAQ, because we all know, Henry and I, that the majority of you are trading NASDAQ. Right, Henry? He sees the stats. He sees it with Perdia in the prop firms. You guys love NASDAQ. So this is, how it can affect the indice, and keep the oil charts on your side as well. Look at the impulse. Impulse came in, right around 7:45 Eastern Standard Time. And this came in closely with all the economic news fronts. But you know what? I like the impulse, the bearish sell side on the economic impulses, the economic events more. 29,472. I'll get into the other levels a little later, and why NASDAQ is looking the weakest, which is no surprise there, and Dow Jones is the strongest for now with the index ranking. Just quickly look at oil intraday, but I know Henry will get into as well. And look at this, oil making strong bullish momentum after that news, and just to keep an eye on that pivot. What I do is I keep it alert, because we're only human, you guys. I can't be looking at 20 charts at the same time. So I put alerts on these pivots, see if oil wants to retest it. If it never retested, that continues the weakness bias on NASDAQ, because money flow is going into energy and not into tech. So just something to keep in mind of. This is just the pivot I'm looking at now, unless we get a new headline coming to New York Open. We got New York Open in about 9 minutes, but I'll let Henry take it away on the bigger perspective here.
All right. Thanks, Steve. Let me quickly think if we talk through everything. Yeah, no, it's fine. It's good. Okay, let's change to charts. Big picture, as always, guys. It's all about the big picture in the beginning of the day. And actually, my recommendation is also that most traders would profit before they go to bed to already take a look on the market closed and then have already a kind of a game plan for the next day. So you get accustomed, so your brain gets accustomed to daily candles, to 4-hour candles, those kind of things. And then you will also get a proper understanding of how the price moves around zones and areas and things like that. Okay, so what happened? We are still could not pass our 30,000 level, right? So as you might know, Steve and I love round numbers. So to 30,000 is a number we have been looking for. And as you see, one tested. So it was 1, 2, 3 times. So the area has been tested 3 times. They were not able to pass through. And therefore, for the time being, check acts as resistance. So everything that goes up is, for me personally, as long as we don't break through, is basically pullback scenario. And for the downside, you see our beautiful bullish pattern. So as we have stated a couple of times, that also might be a kind of a diamond.
Yeah, it's still intact. It never broke.
Still intact.
Upside or downside.
So therefore, I'm just saying again, right? I think I talked about last week. I don't know if it works or not. I don't care. For me, it's all about seeing it in advance and to be able to profit from it if it breaks. So basically, as long as we're sitting within the range, it's a range play for me. So I don't expect much, right? In quotes. Actually, my camera is a bit, I'm sorry, like this. I don't expect much in quotes. It's like 100 points, 150 points here and there, but it's not a major move that you might see if it breaks out to one, like either on the long or the short side, where you might see 500, 400, 700 points in a clear break. So for the time being, as long as we're sitting above, I'm watching this area here, 29 to 50. And some people have been asking, how am I choosing those levels? It's basically just the amount of touches, right? It's and again, it's not a science; it's more of an art. So it's just like make an estimated guess. So it's in this regards, I have more here, 1, 2, 3, and then this one spike through 4. So this is the area, in my personal opinion, where we have the most interest, and so therefore I care about this area. You might even draw it bigger, like this. So then the area itself, the zone, the support area, becomes a super wide one. And as long as it holds, it acts as a support level for me. And you see, guys, again, I don't have an opinion. I don't know if it will break below or if it will stay intact. I don't know. We also might break through, test this support area here, and then bounce back, right? Again, I don't know, and I don't care at this point because we're intraday traders. Everything I want is to be aware of how far might the market go and what might happen. So all I want is a reflection from an area to see an impulse. And if I get my, not currently, I'm not trading, but if I would trade like back in the day, I would watch out for like a move of 100 points, 80 points, 150 points, right? And considering these areas, that would also be a high value area in terms of probabilities. And this is everything, all I'm watching for. I'm looking at these areas, and maybe for you for better understanding, why does it matter? Well, if you sit, let me quickly delete this here. Let's say this here is for me basically the worst you can do. So we are sitting more or less in the middle of the range, right? So what do you do with your stop loss? Because at this point, the market can do everything. So one thing I would like to see here is, for example, similar how as Steve also trades, you time it with impulses, right? With news events, with messages, with any breaking news, financial juice or Forex Factory might pop up, And then you have enough momentum for the market to break. So for example, let's say, let me show you 1 hour chart. So if the market sits like this and you have no impulses, actually we're about to open for minutes, so they're going to be on the opening impulse. But for the time being, there's nothing going on. The market came down, so it was the second wave, right? First wave, correction, second wave. So now from here on, everything can happen. Usually the market is always the clearest on the first and on the second wave, and then all waves afterwards are more or less choppy in nature. They're only clear if there's an impulse behind, right? So if you have something big news coming out or some unexpected news, then you might see another impulse down or up. But from this point, it can basically also just chop around and you will have no idea which way it will go. So what do you want to see? You want to see a kind of a consolidation. You want maybe to see a kind of bullish, like a bearish flag, range whatsoever, right? And in order to increase your odds, in a perfect world, you would also like to see a news event or some unexpected news, something comes out that has plenty of liquidity behind, and then you just join a wave basically as a surfer, and you ride along, right? If it's some like unexpected news to the upper side, then you can also join it on the long side and the bullish side. But if it confirms the current path, and the path is downwards, even though we're in a range, but at least like over the last 2 days or 1.5 days, it's basically showing down, and this is what I'm looking for. And Trey and Steve, you can also give your take on this.
Yeah, like it was, just been stuck in a range, took liquidity, you could say, to the downside a few days ago, but yeah, you guys, we're intraday, longer term, you could say we're in a range, so maybe I tweak my strategy intraday because there's no clear trend on NASDAQ, but also move my eyes on ES and Dow Jones, which can be trending a lot stronger. This is why I never stick to one index, you guys. I'm not stuck in the mud. But if it works for you, and if you're okay to not take as big as, let's say, profits, and you're able to readjust your position sizing because you're able to identify, okay, we're stuck in we're stuck in a range. NASDAQ is not going to break out highs and lows and continue like Dow Jones or let's say Russell 2000 has been, then that's good. Stick with NASDAQ. But if you're trying to get those same setups, the breakout setups that were coming in a few months ago, or even last month, then you guys, you're finished, because the market's always evolving. It's always changing. Yes, NASDAQ, as you can see today, is down the heaviest, will be the most aggressive. But when you zoom out, it hasn't broken any lows. It's still stuck within its balance. And just because it's the weakest for today doesn't mean it's going to continue breaking lows. And we have near open right now, and we are, seems like we surpassed all the news impulses. So economic news that came out, you guys, unemployment, as well as the Iranian news, seems like ES and NASDAQ has broken out of that range into the upside, but not with much volatility. What I'm looking at right now, Henry, just about 75, close to 78 points so far on New York Open. Just wait for your levels to get tested. Show that patience. Put in alerts. Alerts always helped me out, and that's how you guys move forward. And that's
so. And maybe one more thing, right? So for the people, some are asking, why do I have this stocks on the right side, right? It's like the Mac 10, Mac 12, if you want to say.
Oh, Mac 10. I only have Mac 8.
Yeah, I'm expanding. No, but the question is like, that could, like, you can use it as a kind of an indicator. So look, NQ has been down like minus 0.7, 0.8%, right? But a part of NVIDIA, like semiconductors, all the other major ones being more or less slightly positive or like at zero, a part of Tesla and Meta. And this gives me basically the opinion, all right, we have plus 0, plus here, and we have minus there. So therefore, the market is mixed for me. And this gives me an indication for the range play, what I'm trying to explain, right? If we're in a range, the market can go both ways. If it would have been broken down to the downside and we would seen here like minus, 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 everything would be red, then I would have a completely different bias, and I would say like, all right, I'm only seeing the downside here because we have broken out on the chart, on a big picture chart to the downside, and we're also seeing only reds across the major stocks that impact the Nasdaq, right? But because we don't see it, and when we see a mixed picture, it gives me a possible. It can always turn red, right? It can always turn red, so you cannot trade this blindly. But if you are discretionary intraday trader, that can give you a hint what kind of open to expect from Nasdaq. And if it's a mixed bag, like here, red and green, then usually the open is not straightforward. If it's all greens, most of the time it's like, again, no financial advice, but many times it's rather bullish, then it's bearish. And if we see it mixed, then it's a range play. If it's all red, then more times than not, it's bearish if the chart and price confirms, right? And this is what we try, guys, to help you with, to teach you a little bit, to show you some tricks here and there, to explain our strategy for many years of experience that you can add to your arsenal and improve your odds. Yeah, this is for that. Let me quickly. Actually, I've been completely. I don't know when they added it or if it was always there. As far as I've always thought, it didn't have this option. Did you see it? You can basically here. You can change between electronic and regular trading hours, Steve.
Yeah.
Okay. Okay.
Oh, you didn't know that on TradingView? Because I know with the NinjaTrader.
Yeah, with NinjaTrader, but in TradingView, I assumed it didn't have this option because
you can cut out the pre-market completely, which I would prefer to do. But because we have so many headlines, so many levels pre-market that I have to map out, unfortunately, I can't do it. But if I was able to delete all the noise, Henry, and not worry about it, oh, I'd love it, and only worry about Nasdaq, or sorry, not Nasdaq, but the New York Open, post New York Open.
But now it's actually it's actually makes here a really nice picture.
Yeah.
So now we have like yesterday's, like these two levels, basically 29,400. It's what I'm watching, right? So I want this to get closed below if I would consider it a short.
Yeah, it does cut out a lot of noise.
Yeah.
When you edit that, but yeah, since so many of the news, a lot of insiders are dumping their orders pre-market. It's just interesting too.
Yeah,
how a lot of them are doing it. Like, why not wait till New York, Henry? Why are they in such a rush to dump their orders pre-market with thin liquidity? Because they either picked up some sort of information. You guys, whether you like it or not, this has always happened on Wall Street. Insider information. It's what happens.
Yeah, but sometimes they're also pushing the market down in order for them to get a better price at the open, right? So if
That's also because they can play both sides. Because there's also the options market where they're hedging their bets and they push it like Henry said, pre-market, because during New York when there's such high liquidity, maybe they're not able to push it as much. So you know what? That's actually very interesting, Henry. I never thought about it that way. And this is why we talk it out, you guys, and this is why it's important. And I could say even to myself that Henry is my accountability partner. I speak it out to him, and this is a perfect opportunity, you guys, to connect with us, speak out, or find a partner within the Discord. There's plenty of traders in the Pretty Discord as well. So always reach out, never trade alone. And I had the opportunity to have, Henry as my accountability partner and representing this live with you guys. So,
yeah. All right, let's continue. So, and I think ES, I really don't like this range here, right? For the last 2 weeks.
Yeah.
I think it's a really nasty one.
Floating higher.
Yeah, but like in a really ugly way, right? It's more or less stuck in a range of 620, let's say like 150 point range.
Yeah.
So it's like 2% range. And I can imagine we will see an explosive move out from here because there's just so much liquidity being accumulated or distributed at this point. So therefore, really, guys, watch out for this one here. Yeah. And for the time being, would I trade ES? No, I think we find a better one. And Dow Jones doesn't stop to surprise me, right? It's really like it does its own thing.
It truly does. Yeah.
Keeps on grinding slower and slower. But I have the feeling we're already seeing some impact from the summer liquidity drawing going forward. So like with many dojis, much more stuck in a like it's being stuck in a range, right? And look, Russell's also accepted our support area here. Could not pass through. Doji extension. Test. Again, test today also. So for me, this one is a big support area for the time being, as long as it's not broken. So it's still upside move for me. If I would need to summarize it, I would say Russell bullish, Dow bullish, ES range, and Nasdaq range, right? And this is how I would play it. So if I see, and I could imagine that your market correlation analysis will probably also confirm it.
Yeah. Like on the intraday, I have Nasdaq for today as the weakest. So the long term is matching up with the short term, and this is also a tactic you guys could use when the long term matches up with the short term. That can be very powerful in your trading. And this could also be a topic that Henry and I could explore later on in the future. I think I would actually make note on that. Long term matching with the short term.
Yeah, definitely. All right, what else do we have? Yields, two-year government bonds had a correction beginning of the week, but still bullish, right? So we still have this kind of bullish range here. 10-year, kind of a flag, right? Why it's important? Well, if it rises, it creates a lot of pressure for the stocks along the way, because it makes borrowing more expensive. It makes reborrowing, refinancing more expensive. In terms of gold, it pushes gold lower. And so yeah, actually silver, gold, bearish. It's still insane to me how in the beginning of the year, how bullish it was, and all the headlines were like, yeah, gold 10,000, silver 500, silver 1,000. You remember all the headlines?
That was crazy.
Yeah. So
who can ever forget the headlines? But now, have you seen any headlines lately, Henry, on gold and silver? No.
Yeah, it's always the same. Yeah.
Yeah. No more liquidity events. But it's interesting how the top, because I truly thought like when that huge liquidity event, all the margin calls happened, and then we had that huge sell-off. I think it was, what was it, like 35% sell-off at the very top. And then we were inching closer, like for a few days, a few weeks, we were inching closer. I thought the high was going to take it out, and we never took it out. It's very interesting. So it made a major lower high, and I bet you a lot of traders were betting on that high to get taken out. And look at where we are right now. Can you just measure out from the top how much we're down right now?
And I can tell you one thing, that many professional traders clapped in their hands once the market came back here, because they were able to initiate some proper short positions.
Yeah. The professionals, but the retails were probably wanting that high.
Yeah, well, you get what you're praying for, right?
Yeah.
All right. So what do you want? You want the
just from the high to the low, right? Just the high to the current position. Like what's the percentage right now of what it's down?
Minus 30.
Minus 30. Yes. When I saw the video, and I don't know if it was a current video, but I've seen this so much, where the lineups of people buying gold, Henry, I was like, that's it. If we were in talks then, but I think it was only like when I started seeing those videos, it was still about, I think, a few weeks off from the high, because I knew it could still squeeze a few percentage points higher, a few days, a few weeks higher. But when I saw the lineups all over the world, Australia and Asia and Europe, people lining up to buy gold, I was like, that's it. It's the top. The top is in. when you see those videos, it was so funny. But anyways, that's just for entertainment, you guys. But that was.
But it's human. It's human nature, right?
Yeah.
It's human nature. So yeah. Okay.
And imagine what they're thinking now.
Well, I would say they are thinking, yeah, it will come back.
Or average down, But anyways, you guys, it was just.
So maybe for the crude oil traders there, but also for some context in regards to stocks and inflation expectations, right? So we have been watching out the 78.50 area for quite a while, also for a couple of weeks now, and we finally broke it, right? So we broke it. We are now above it, and for the time being, as long as 78.50 is being held, it's bullish, basically in my analysis. As long as it's holding, it's bullish. So just some things to consider once we break below. But again, guys, right, have a flexible mind, be flexible. That's the reason why we're doing it. We're not focused on one side. We try. I mean, we're also human, right? We don't try to be too biased. Sometimes it happens. It's but
it's human nature. It's human nature to be a little too biased.
And sometimes it's horrible because you should not be biased, but sometimes it's just like so. I mean, for example, now with gold, right? If you see the Qs outside, and you're like, all right, it's a bullish upwards momentum, right? So in theory, you could also expect, all right, bullish pattern, and then it goes higher, right? Because as long as it's not broken, it's still bullish. But subconsciously, if you see it, you're like, okay, no, it cannot go up forever. But you need to be prepared to play both sides, right? Because in some scenarios, it might have another push or two.
Yeah, and that's the key. And that's why we bring up the pivots, the risk on the upside and the downside. And that's the issue with traders. I see it so often, Henry, is they're only looking for the risk to the upside and never the downside. And that's where they get trapped.
Yeah, but that's not a problem. But that's like the systematic thing that's going on in the world, right? Everything is just long only. And people are getting brainwashed into long only, and then they're completely not comfortable at all to play the short side. But yeah, as an intraday trader, guys, my recommendation: train yourself to be able to play both sides, because there are opportunity on both, and it makes your life much easier. And that's actually also a thing, right? For the last 17 years, it was basically long only. We had corrections, but with super steep recoveries, but at one point it might stop, right? And then you might get a bear market for like 10 years, 5 years. I mean, I'm not saying it will happen.
Don't scare me, Henry. Don't scare me. 10 years.
Yeah, but I mean, it's but I mean, if you watch like the long-term charts, 100 years, 150 years, right?
Yeah.
It's the market usually goes in cycles. It's just happened to be that the market is being completely manipulated through all kind of measurements of being long only, but we'll see. All right, what else do we have?
Just let you know, quick heads up, Henry. Yeah, Nasdaq selling out hard. We had the first 15-minute closure right now. I just want to quickly update you guys. This is pretty big range. I don't know if I will use this range as my risk setup, but yeah, it's 220 points right now. First 15 minutes. I'm not saying we could not go another 220 points, but this is how I measure my risk, you guys. It's connected with the measured move, intraday, and so far the first 15 minutes, Nasdaq has given us a 220 point sell off. So I don't
want to say, Steve, I don't want to say anything, but your measured move 15 minutes would be lying directly on the.
And that would make sense. Line. And that's this is how the market works, you guys. The measure move, if it makes sense, that's what you have to go with. And you know what? And this is also how you can better your trading. I just spoke with Henry about it. He's given me an idea where it lines up with another level, another trend line. And I'm making notes about it right now, mental notes, especially with written notes, because this is what I do, you guys. I journal live into my trades. But then again, still the first 15 minutes. So I'm not taking any trades until the hourly close afterwards. But this is something definitely I keep in mind. And yeah, thank you, Henry, for that.
No worries. I mean, but again, guys, right? This is just one scenario. We might also just freaking reverse, and then you're closing the day with plus 2%, right? So this is the important thing that people need to consider. It doesn't matter if it just went down 200 points in 15 minutes. It can reverse at any point, right? Trump might watch the charts and get a call like, "Hey, we need the market to go up," and then it's just one tweet away, right?
Yeah. Just out of humor. Do you think he ever checks the charts, Henry?
I would assume every 30 minutes, maybe every 2 hours. So,
Jokes aside, yeah.
no, it was funny when the market has been selling off last year because of his tariffs, and he was like, "Yeah, I'm not invested in the stock market, and I'm not watching it." What? And Nasdaq? What's that? Where does it? What? No, I didn't check Nasdaq for months. I don't care. And then, and everyone has been calling out his shit like, "Hey, no, it's not. It's not true."
Yeah, it's not true.
Yeah.
But did you see there was a stat because he had some crypto meme coin,
Yeah.
Trump coin or whatever, and of course, he was invested in himself, either personal, company, corporate, who knows, offshore, who knows what kind of money he had invested. But they showed the capital gains tax he had to pay on it was like hundreds of millions of dollars that he made. And of course, people are going to be angry. Other people are going to be like, "Oh, nice trade." But it was just very interesting how a president is making money off of these crazy markets like that. I don't know. That was it's
Yeah.
it's a crazy
Guys, again, maybe we're always making fun of Trump but again, we're not political here. It's just pure entertainment. And trust me, with any other president, we would do the same if there would be enough room to make jokes about it. So therefore, no political discussion here at this point. All right, what else do we have? So yeah, basically NQ, right? Again, I repeat myself. Big picture. We have the trend line. We have our something like this. And this is what I'm watching out, right? I'm watching out for this. It doesn't mean if we break below this trend line that we will immediately go down, but it will be for me a first indication that the market might see some weakness at this point, and then I will be cautious, and then Steve will talk a little bit in a couple of minutes about this. Then you might want to watch the other correlated markets, right? And in my case, also watch the stocks. So you see, do I actually have the screenshot? Oh no, I closed it. Oh no, it's here. So you see, we have been sitting at the market open. So Apple went up a little bit. Wait, I'm sorry. I'll select this. Microsoft turned red. Google plus minus, but also went down. Meta turned stronger red. Amazon also red. Tesla. You see how it turned? And this is now at this point, I like the downside much more, because now I also have confirmation from the stocks, from the big players, right? Not just from some penny stock, or from the big players, that there might actually be something more to it, to the downside move. But again, means nothing, because it can reverse at every other minute, and this is what makes trading fun and exciting, and this is what makes risk management, position sizing, and all of the topics that nobody wants to talk about so important, because it just can turn around and go the other way. And then you need to have your stop in place, and you need to be flexible enough in your mind to maybe even reverse your position. Or at least if you're not comfortable doing that, at least then just sitting on the sidelines on your hands and wait for the market to show its clear path.
Yeah. Keyword there is comfortable. And once you guys start feeling uncomfortable and oversizing, that should always be a signal. Put this on your notepad in front of your screen. Whenever you guys feel uncomfortable, heart rate is going up, get the heck out of the market. You shouldn't be in your position, because that's when bad decisions can arise and can happen. Yeah. And Henry, we have about 10 minutes until the hourly close.
Yeah, let's shift gears. I will stop it here. So guys, please be aware, we have always Zoom, start your day with the big picture and then walk your way through. Therefore, follow Podia, links down in the description below. Follow Steve. You can also follow myself if you'd like to. And then make sure to subscribe to the channel, turn on the notifications so you get notified once we go live. And yeah, I would say, actually, maybe one last thing. Our good friend, Cosby. So that was the limit down day, right? Then we extended a little bit more, hard reversal, same day. Oh, and surprise, surprise, prior resistance, prior support becomes resistance to the point. To the point. I
You
mean,
mean no surprise? You mean
yes, like it was a ironic, like
yeah,
surprise, surprise, no
surprise, but
surprise,
no
no
surprise in
surprise.
reality.
Yeah. So, and this is what I said. Like trading, if you get accustomed to a certain style of trading and you just do the same things over and over and over again, you will start to see a logic inside the markets, and you will better understand its actual movements, how the market moves, because then you will also understand how the how big players and the big money is viewing the markets.
Yeah.
All right. So yeah, but I'm sorry, maybe one last thing. So from here on, it's basically the target is still this support area here, and this is what we want for the market to break. Why does it matter? Well, Kospi represents basically Samsung and SK Hynix are representing 60% of Kospi. So if the market, like if the index moves down dramatically, then you know the whole semiconductor sector is weak, and therefore that might also have implications on AI, right? And this is what we're trying to bring across, guys. You might being stuck inside NQ, but there's so much more to watch and to be aware of that will help you improve your trading.
Yeah, and I wouldn't be surprised influencers are going to say, setup's not working on NQ. What is going on? Well, Henry just laid it out for you guys. Here's why it's not playing out the same as other indices, other assets. Why it's stuck in the mud. Replay the streaming, guys. We kind of, hopefully, we gave you some information that helps. But yeah, this is why we do it, to give a better or more broad perspective of how markets move within each other. And let's just quickly look at Nasdaq, you guys, the end of the day, intraday. What is the overall mood? Yeah, down over 1%. Overall mood is bearish. We got that perfect retest. So I labeled out the impulse level 29,472. You guys, we got from the news, economic news front. We got the retest perfectly on New York Open. Look at that. And then clear rejection. I'm not blindly entering on this retest, but that gives me an extra indication, extra confirmation of what the overall trend is. Because we did not accept these levels that had news behind it, that had volume behind it, then my bearish bias continues. And what do I like to do? Oh, but before I draw the risk to the downside, Henry, I just want to show you something. Look how perfectly we closed the gap from Globex. Look at this to the tick. You know, and like we spoke about the gap from, especially when it opened up Globex on Sunday. We had a low overreaction. The pre-market tried to close it, wasn't good enough, and then we had the big scoop to the downside. New York pushed enough volume to balance out the market. And this is how the market works, you guys. There's imbalances and there's balances. And look at that, right to the tick. Completely perfect. Close the gap. And after we close the gap, the market's like, no, the buyers stepped out. No one's purchasing prices at these levels. So what's going to happen? We go to the next level down below until the buyers are able to step in again. But so far, it seems like after we close that gap, Henry, the buyers have not stepped in. And we will most likely continue to the next level lower. So let's look at that right now, you guys. Where is our next area of importance? And this is Wednesday's open, 29,200. Let's keep it a nice whole round number for you guys. And I'll map this out. 29,200. Let's see how close we are right now. Yeah. So yeah, longer we stay below our news pivot line, the more likely we're going to tap that level. And that's where I like to look at it. Possible entries of interest, whether long or to the short side. I like the volume to step in. And if there's no volume, then I step away, maybe look at other indices. But this is my area of interest. But a nice alert down there as well. And now let's do the measured move and see our risk to the upside. If market would turn around, because remember, you guys, expect the unexpected. Just because Nasdaq is selling off and we're only about half an hour post New York Open, doesn't mean that's going to keep selling off after the hourly close. So let's look at our measured move. A measured move is the top side of today's daily range from the London and Asian Open. And does this map out perfectly? Not perfectly, I would say, but very close to the open from Tuesday. Or was open from Tuesday right around here. So yeah. Just measure this out, measure move, and it lines up nicely with a lot of volume that occurred on Tuesday. We had a nice push right up into the gap close. And then after the gap was accepted, price came down, retested these pivots a few times, and look how it resisted so nicely pre-market. So yeah, it makes sense for me. This is what I always like to do, you guys, make sure these pivots make sense. Talk it out to myself, talk it out to Henry. But if this, let's say this pivot was way up here, it didn't align with too many large orders or areas of resistance, then I would map it out again. But since the measured move lines up perfectly with today's range and Tuesday's New York Open, that will do for me. So what do I have today? I have NQ as the weakest. Let's quickly look at the ratios, you guys, just to look at the real spread between assets. I had Dow Jones as the strongest, but I think Russell 2000 will actually overtake Dow Jones as it's been moving a lot heavier. And as you can see, yeah. So clearly NASDAQ is weaker than ES, weaker than Dow, and a lot weaker than Russell 2000. Russell 2000 getting a big pump. So this is the ratio, guys, remember. So this is NASDAQ divided by Russell 2000. So this is the inverse effect. So yeah, Russell is pumping out of its range to the upside. So I will actually mark out Russell as the leading index for today. So let me just quickly edit this out. This is what I like to do. I always edit my live ranking, and this helps me with that trading to make a better decision of where to enter the bid, whether I'm going long, whether I'm going short. Because right now, if I'm looking for any long ideas, I'm staying away from NASDAQ. NASDAQ is way below its pivot level. Now let's compare to Russell 2000. Look at Russell 2000. Look at the picture of the printing right here. So, this is the same pivot at the same time that happened at 8:30 Eastern Standard Time, where we had economic news on, unemployment, on retail sales, as well as the Iranian news coming out shortly after. And yeah, so what do we have right now? Russell 2000 breaking the highs. So let's quickly look at the risk to the upside. What do we have to the upside? We have New York Open right around on Friday. I think this would make sense. Areas that it would like to tap into if the bullish bias continues on Russell. Remember, it doesn't have to continue, but if it continues, then this is a level of interest right here where it was met with some resistance. New York Open, flushed down. We had another tap, another spike. I would say an overreaction on Tuesday. So it's been a heavy area that's pushed down price 3 times now. So yeah, I like to mark that out. So this is the measured move to the upside. Now let's look at the downside. If the trend, let's say, would not continue and everything reverses and Trump comes out with a comment and the whole market is shaken up. So measure from the 2977 right down here. And this is what I'm looking at to the downside if everything is scrambled and rebalances into NASDAQ. And this would be taking out the low from Wednesday. And we zoom out even more. And this is a low from another Wednesday from June 17th. So yeah, pivots make sense. They're equaling out to important levels, not only on 1 day, but 2 days as support, strong demand levels that will not break lower. And yeah, this is what I'm seeing, Henry. What do you think? We got the 1 hour close right now. Indices are ranked up. We are ready to go for the trading day. If you guys have any questions, let Henry and I know. We are always watching the markets, always watching, Profit news, what's going on with the indice. It's always evolving as well. And that's the beauty about, any business. It has to evolve. Purdy's always evolving, always looking stronger, always moving forward, playing its steady hand. Anything else you want to say, Henry, before we close shop today? Oh, you're on mute, my friend. Oh, we got you.
Yeah, I just said, guys, if you want to learn more, follow Steve, follow Podia, stay informed, get notified once we go online. If you want to give Podia a shot, use code PREMARKET to get 25% off. If you have any questions whatsoever, feel free to reach out directly to me on X, and I can answer you whatever questions you have, or Steve. And yeah, for the time being, there's maybe one last thing. You see, Steve and I, we have a little bit different strategies, but we're both doing the same thing over and over again. And if you keep watching us for a while, you will understand and see why we're doing the things we're doing. And it's not complicated. It's basically just you need to commit. And this is, I'm always repeating myself, you need to commit to one style, to one certain style of trading. You cannot mix up like ICT with Heiken Ashis, with like RSI, with price action, I don't know, flow trading. I don't know, like you cannot mix up different styles. It's like martial arts, right? And I think maybe this is the best comparison. Many people are trying to do kind of an MMA style, right? They are trying to play 5 different styles at the same time. But the difference is, if you do this, you need to add one style after the other. So for myself, I started with candlesticks. Then I studied everything about price action. Then about bars, about levels, statistics, mathematics. It was like one style after another, and this is how you expand your view and broaden it. But you can, if you're just starting out and you're not profitable yet, then just stick to one style only and learn everything that there is to learn about it. And this is how you become proficient, how you become consistent, and then from there you can grow and expand.
Perfect. Yeah, exactly. Like, this is focus on the criteria that make sense together. And if you're adding other pieces that don't connect to that criteria onto your setup, then delete that right away. Even though, we should always be evolving. We should always be learning as traders. That's the thing. Never stop learning. But it has to make sense with your original criteria. It has to all connect together. Like, I use price action, and I also use volume. So clearly volume connects with price action.
Yeah.
But if I'm starting to look at Heiken candles and all these other, different mathematics that's not connecting with my volume or my candlesticks, then, I can delete it completely. So yeah, just a quick side note, you guys, on that. I hope that helps. Trade safe today. Remember, always expect unexpected. I also believe did Trump already speak, or no, he's speaking in an hour?
Let me double check.
I didn't see any comments, just quickly, because
no, he speaks at 9 p.m.
Sorry, 9 p.m. You guys. Sorry, not 9
a.m.
a.m.
Yeah.
So,
I also had to check, because I was like, all right, either he's about to speak. No, it's 9 p.m.
Yeah, sorry. I was like, wait a minute. Did we miss it? No, but it's 9 p.m. You guys. So yeah, we don't have to worry about that unless you guys are trading the Asian session. If you have edge, if you make money in the Asian session, so just be careful. You will be adjusting the nation then. So there'll definitely be some impulses during that time.
All right, everyone, trade safely. Maybe one last thing. There's no stream tomorrow. Next stream on Monday, everyone. So therefore, subscribe, get notified once we go online. But next stream Monday, 9 a.m. Eastern time. And for the time being, trade safely, take care. And Steve, once again, thank you. And everyone else, see you soon.
Yeah, thanks, Henry. Thanks, everyone.